Hi, and welcome for joining us for episode 2 in our YouTube series on 60 seconds highlights on risk. Today we're going to talk about protecting executive team members and directors against personal liability. And there are 3 ways that directors and executive team members can protect themselves against personal liability. The first is their conduct. The second is via insurance. And the third approach is via indemnities. Now, we're going to talk about insurance and indemnities in later episodes, so today we'll focus on conduct. Warren Buffett says that it takes 20 years to build a reputation and 5 minutes to ruin it. Well, that really is the basis behind this discussion on conduct, and we're really going to focus today on one element of establishing proper conduct, and that is setting in place, implementing a organizational code of conduct. These are typically developed jointly with the board and the executive team. So why have a code of conduct applicable to the organization? 2 reasons. First is brand and reputation. When the executive team, when the directors walk the talk, when they set the standards for honesty, integrity, and principled business behavior, the rest of the organization usually follows suit. The second reason is establishing culture. A code of conduct reinforces the principles and requirements in terms of organizational behavior. It reduces the risk of fraud, conflicts of interest, and other unethical lapses. You really set the bar for culture in the organization relative to behavior. So, what are the reasons? What are the objectives in a code of conduct? First of all, it reduces risk, as I mentioned. Secondly, it's there to introduce new employees and existing employees on the behavioral expectations, the business conduct expectations of the organization. It also helps in attracting and retaining high caliber employees and setting the bar for their behavior and conduct. It sets the boundaries of acceptable behavior, and it helps in terms of informing contractors, third parties, suppliers, and others doing business with the organization in terms of the expectations and standards that your organization expects. It sets the basis for sanctions in case they have to be used. And lastly, it helps fulfill regulatory obligations in public companies. So in short, an effective code of conduct goes a long way to steering behavior and protecting officers and directors against personal liability, with one caveat, and that is that it is implemented, that it's been distributed and understood throughout the organization, and that the tone from the top, i.e. the behavior of the executive team and the directors, mirror the details of the code of conduct. For further reading on this subject, you can go to the CPA 20 Questions series and look up the 20 series question on directors should ask about codes of conduct. It's available as a download for free. See you next episode. Thank you.